2026.
2026.
2026.
2026. We will see real world application.
2026 will be the year when AI enables true ground up innovation. Bharat backwards.
2026 will be the year where Indian founders stop asking, can we go global, and start asking, which market do we win first?
2026 might be the year we finally see all of the promise coming into reality.
The next big unlock is invisible and here. It's happening in the back and middle offices.
Speed is no longer a feature, it's a strategy.
When I talk to builders who are now itching to build the next set of generational companies, I think it's more full stack.
Not only AI will make intelligent hardware, AI will also crash times to build this intelligent hardware.
The future leaderboard in classifieds or vertical marketplaces may not be decided by who has the most listings, but by who builds the most AI native workflows.
The winners in this space will not just make AI a lot more powerful, but they'll also make it a lot more trustworthy for enterprises to adopt.
Make in India, to build in India, train in India, deploy from India. So India's time isn't just coming, it's here with AI, and it's being built one founder at a time by Indians in India and globally. "20 years ago, when we started Matrix India, conventional wisdom from investors across asset classes, early to late stage or even real estate, was that great ideas in great markets was the right way to invest. Having started a company when there was no internet called Bazi.com, which was India's first e-commerce marketplace, we had to create markets, we had to create businesses, and that idea of markets and businesses being what you back did not sit well with me. Businesses don't execute themselves, market don't execute themselves, people do, founders do. So we started and focused our investing business around backing founders first and last. Today, this is the new conventional wisdom with many celebrated founders locally and globally. We are privileged to have seen this play out firsthand and grateful to all the founders who helped prove this belief correct. And over 2 decades now, that conviction has only deepened and gone to the next level, that founders create markets. We have seen many of these examples in our own portfolio as well as outside our portfolio. And then somewhere along the way, the market deepened. A digitally growing India developing into the narrative of a developed India during our lifetimes, Viksit Bharat by 2047 took shape and unleashed a powerful new set of entrepreneurs, globally ambitious Indians, building for India and from India. And we started thinking of founders as digital industrialists of our age. And our destiny as investors got tied to the countries. And that's how Z47 was born. And then came AI. The scale of India's contribution to technology has always been extraordinary, from pioneering IT services to BPO to KPO and to running the best global companies like Google and Microsoft. With AI, we believe it's time to multiply this. Our biggest resource is our young and skilled or scalable population. That's a generational advantage. No other company can claim that they have the largest population in the world. The way to apply it to AI, in our views, is 3 Ds: data, development, and deployment. From human in the loop to forward deployed engineers to developers at scale, English speaking and mobile native to engineering production systems at scale, India isn't the builder's base anymore. It's also the world's largest or second largest AI market. More Indians use some of these platforms than from any of the other countries. Make in India, to build in India, train in India, deploy from India. So India's time isn't just coming, it's here with AI, and it's being built one founder at a time by Indians in India and globally. So if you're such a founder, Z47 would be privileged to partner in your journey. Do reach out to us. We are also launching a new series called Intelligent Indians, which brings together all the themes that we have discussed here. And we look forward to exchanging ideas and having you collaborate with us on this front.
Going into 2026, we are at a really interesting point in the evolution of the global AI ecosystem. Everyone recognizes the promise, there's large-scale excitement, but equally some worries about an AI bubble. Underneath all that noise, I keep hearing two questions. What does it take for AI to work at production scale? Not just in the demos that look like magic. Second, what is India's role in that global AI ecosystem? We've always believed in investing in global companies with an India edge. And I actually think that edge compounds in the AI ecosystem and doesn't get diluted. If you look back in history, India has quietly sat in the middle of every messy technology transition, whether it's the Y2K cleanup, the global mobile rollouts, cloud migrations. Whenever there's a big, unglamorous workflow problem that needs smart people to untangle it, it somehow runs through India. Founders we work with every day feel this viscerally. When we ask, does the India edge still matter in AI? The answer is an immediate, grounded in belief, yes. Why do they feel it? Because they're able to hire very high quality talent away from the craziness and competitiveness of the valley and point them at deep, painful workflows. Of course, they marry the talent here in India with global, high quality talent, and they work hand in hand, going back and forth between the global markets and India. That's how the best global enterprise companies are built. The first trend line that we're excited about is services as a software company or companies that marry AI and services together. There are many sectors, healthcare, financial services, where good enough in terms of automation is just not good enough. You need 99.9999999% reliability. To fulfill the promise of automation here, you can't just pull some models together and a dashboard and so on. You need AI agents doing the heavy lifting, sometimes real humans in the loop doing the auditing or providing services additionally, and seamless handoffs between the two. And most of all, a company and a founder willing to own the end-to-end outcome. That's the services as a software company. The early revenue might be 20-30% services, but the IP compounds into product. Over time, you extract what repeats, you productize the patterns, and you build a deeply defensible platform.
Consumer brands is an evergreen sector for us at Z47 because, well, incomes are rising in India. And finally, consumer brand founders are getting bolder with vertical integration across the supply chain. At Z47, we see vertical integration unlocking margin, obviously, but also unlocking the ability to iterate, innovate, and launch new products across multiple segments. Classifieds or vertical marketplaces have always been one of the strongest business models on the internet. High intent traffic, deep network effects, and the flywheel where more buyers attract more sellers and vice versa. But over the last 18 months, something fundamental has shifted. AI, both generative and agentic, is becoming the new starting point of discovery and soon will either drive traffic to incumbents, or if the incumbents don't innovate, potentially they may even get disrupted by new AI native classifieds players. The threat is clear. If users begin their journey with an AI assistant, portals risk being pushed down to being invisible infrastructure. Search recommendations, even first-level matching can be done outside the platform. Vertical marketplaces that rely just on distribution and basic listings, especially in sectors like jobs, which are somewhat more commoditized, are very exposed. Real estate, auto, and maybe a few other sectors where there's a lot of physical workflows with dealers and brokers may have a little bit more defensibility. But AI also opens up a big opportunity. Some incumbents may integrate AI to reshape user experiences. Think of like more conversational or natural language search on listings, like I want to find a house that meets this budget with these kind of pictures, or personalized recommendations. Or on the supply side, it could be automated listing creation with AI-generated images, videos, and descriptions. On the agent or the dealer side, it could be workflow tools like pricing intelligence, valuation models, content optimization. I think the lesson is simple. The future leaderboard in classifieds or vertical marketplaces may not be decided by who has the most listings, but by who builds the most AI-native workflows. And the winning platforms in India that today own the last mile fulfillment may see that moat erode because the user fundamentally may trust new product workflows versus just owning that full stack experience. This is the moment to re-architect vertical marketplaces and classifieds around AI, not as a feature, but as the core product. The threat is clear. If users begin their journey with an AI assistant, the existing websites and portals may risk being pushed down to just becoming invisible infrastructure.
When we look back at where we are, I think pre-2023 would almost be called as the new BC, which is before ChatGPT. And since then, over the last 3 years, we have seen everything in our ecosystem go from early infatuation with co-pilots to then the maturing of the ecosystem towards building agentic workflows and solutions, and which has broadly rendered itself very well in building enterprise AI companies, which are more B2B in nature. What I'm more excited about going ahead, and when I talk to builders who are now itching to build the next set of generational companies, I think it's more full stack. What does that mean? That broadly means we have seen, emergence of companies addressing law firms with agentic solutions, companies like Harvey, Legora. But we are now at the cusp. We are seeing companies like Crosby, companies like Nyanidhi in India, which are now taking a bigger, more ambitious swing at saying, can we build an AI native law firm? I won't be surprised if similar themes play out in multiple more categories, where, be it healthcare, which has been the fastest adopter of agentic AI, and companies in our portfolio like Confido are addressing front office automation. There are companies like Rapid Claims, which are addressing other parts of the automation. Great. What happens tomorrow when builders start imagining and building a new healthcare system and a new healthcare company, which serves and becomes the most AI native company for end consumers? This is what I'm most excited about. I'm really looking forward to interacting and spending time with builders who are doing this.
If 2025 was about co-pilots for coders, 2026 will be about co-pilots for finance teams. FinOps automation is the next massive SaaS plus AI opportunity. Think of it as the CFO office for every SMB. Use of AI has unlocked product depth for the CFO's office, enabling high accuracy automation of structured manual workflows like entry recording, recon, book closures, FP&A, tax filings, and treasury management, all of which are headaches for SMBs and small finance teams. Agentic journeys that automate everything from detection, recognition, and analysis, combined with humans in the loop for accuracy, are pushing productivity significantly while bringing better control over decision making. Combination of frictionless journeys and high accuracy will lead to higher adoption of these solutions by SMBs, which has been an Achilles heel for startups building in the domain in the previous era. AI copilots will reconcile invoices in seconds, close books efficiently, flag anomalies before audits, and predict cash flow gaps before they become crises. For India's 60 million plus SMBs, that means CFO level precision without CFO level cost. Interestingly, monetization could be not only via savings on outsourcing spends, but also through unlocking of the untapped SMB treasury opportunity. SMBs account for over 20% of the overall banking revenue pool, but the experience is still very broken, with access to neither high-touch relationships nor truly frictionless digital journeys. By virtue of being in the transaction decision-making flows, access to incremental data, and subventing cost of acquisition, cross-sell of lending and treasury products could unlock significant profit pools for new age startups building in this segment. The fintech story of the 2010s was about access. The fintech story of the 2020s will be about automation, where productivity gains and revenue growth converge. 2025 proved AI works in banking and financial services. 2026 will prove it scales.
Speed is no longer a feature, it's a strategy. And in 2026, India is about to prove just how far that strategy can go. Over the last few years, Indian consumers have been trained on the instant layer. Groceries in minutes, grooming in a tap, diagnostics at your doorsteps, medicines, and whatnot. What started as convenience is now the default behavior. But the real story isn't that quick is eating into the incumbent market share. It's that quick is organizing the unorganized. Zepto, Instamart, and Blinkit rewired fragmented Kirana supply chains. Now, urban companies, Snabbit, Pronto, and the likes are doing the same for home and personal services, and many more. We are seeing a new quick commerce or quick services play every month now. All they are doing is injecting time, trust, and transparency into categories that never had them. And the shift is triggering something bigger, the 10x speed era. Brands today can scale in 18 months what once took them 5 years because demand, discovery, distribution, delivery all have collapsed into a single high velocity motion. That is why we are seeing an explosion of new age brands, homegrown, design forward, digitally native, that were earlier invisible in the pre quick commerce world. 2026 will push this even further in our view. We should expect hyper personalization by geography, SKUs customized by pin code, not state, and much more. Merchandising, we believe, will be guided by local climate, culture, and consumption loops. And entirely new retail experiences where online, offline, and on demand collapse into one continuous surface will emerge. The next frontier of quick is already taking shape. For example, on demand healthcare, home maintenance, hyperlogistics, rural last mile distribution, and many more. New categories where trust is broken, service is slow, and digital rails are still shallow. They will all show up. For founders, the playbook is simple: find the under digitized segment, compress the time to serve, own the trust loop. Because in India's consumer economy, faster creates the market.
I think the big trend line for 2026 would be intelligent hardware powered by AI. 2025 was a seminal year in overall embodied AI and robotics intelligence. If I look at China, probably 80 to 90% of capital flowed into robotics, where more than 600 companies got funded. In the US, there was significant amount of investment in physical AI and embodied AI companies. A combination of all of this has led to a point where in 2026 we will see real world application of autonomous hardware in solving real life situations. And that obviously you will see in robotics in both B2B and B2C use cases, but also in more intelligent drones, submarines, and overall a new class of hardware that is significantly more intelligent and autonomous that's driven by AI. And that for me is truly exciting. If 2025 had companies like Skilled and Physical Intelligence, Unitary and Galbot break out globally, we expect a lot more of that happening in 2026 and companies in India and deep tech also inflecting. The second more interesting part to that is not only AI will make intelligent hardware, AI will also crash times to build this intelligent hardware. And we're already seeing this in semiconductor where the time to build chips is crashing, in PCB design where the time to design PCBs is crashing, in simulation software driven by AI which are actually creating better, more optimized models, and companies like Cognichip, Diode, Zoo are doing fantastic work in taking AI and crashing timelines to build hardware. So in 2026, I'm super excited on the potential of AI influencing hardware design timelines and all of us having intelligent hardware and robots around us. So look forward to shaking hands with the robots soon.
AI and BFSI started with chatbots and co-pilots. The next big unlock is invisible and here. It's happening in the back and middle offices. Here's the current picture. Credit underwriting largely runs on Excel. Collections depends on an army of field agents and telecallers. Insurance claims takes weeks of manual efforts and processing. This is where we believe AI will quietly rebuild the financial infrastructure. The workflows that define operational speed, operational expenses, and cost to income ratios for banking and financial services companies. Startups are already turning these pain points into product opportunities. Here are a few examples from our portfolio. Offbusiness and Oxizo have turned to using AI-assisted underwriting and cash flow analysis to enable loan disbursals to MSMEs in hours and minutes from what used to be day-long processes. Another budding startup, Greylabs AI, in our portfolio, is helping fintechs and NBFC lenders rethink and redesign their collections processes to make them much more leaner and efficient. Digit Insurance is applying AI to claims automation and fraud detection that helps them clear claims in minutes and not weeks. OnFinance is helping companies manage compliance reporting at scale, accurately, and at a much lower cost. The future is an AI-driven operating system silently running under every financial institution, reading documents, predicting defaults, preparing CAMs, and running collections in the background while humans focus on decision making. For founders, we believe this is a new profit pool, the automation layer that will rewire India's largest BFSI workflows, and the opportunity to take over key functions using a full stack approach is more real than ever. So, lesser time, more work, and higher operating margins is what we see for companies of the next generation. The winners won't just win co pilots, they'll build operating systems for India's largest BFSI institutions.
With AI maturing, 2026 is a year commerce gets taken apart and rebuilt. Not tweaked or optimized, but rewritten from the first click to the last mile. For 2 decades, shoppers adapted to the internet. This year, the internet finally adapts to the shopper. The PDP page, that old rigid storefront, gets retired. Voice agents step in as the first layer of trust, handling doubt, hand-holding discovery, and quietly lifting conversions. Shopping stops being a maze of tabs and becomes a conversation. Discovery splinters into a billion personalized feeds. Fashion tech systems will churn the world's product photos into infinite taste-specific reels, a visual universe that reshapes itself around what you love, not what a category manager wants to push. Beauty becomes a science, not a guesstimate, not what the influencer of the week is pushing. An AI skin specialist designs a routine built on your texture, tone, climate, and habits. Travel shifts too. AI agents restore the traveler to the center of the journey, killing the hotel, flight, tunnel that OTAs have locked us into. Your intent becomes the itinerary. Brands move faster than they ever have. Catalogs and campaigns generated at 10x speed at 1/10 the cost. The distance between idea and market is compressed to minutes. And advertising? It finally earns its keep. AI links creative to conversion with brutal clarity. 2026 is the year AI hands control back to the shopper. Now speed comes with nuance and choice comes with context. Now commerce starts to feel personal again.
Is there room to create the next Meta or the next ByteDance? I think so, yes. And that's what I'm super excited about. With AI and everything that's been happening in the Cambrian explosion of AI being a great enabler for anyone and everyone to start creating content, start creating interactive experiences, I won't be surprised if we start seeing the emergence of the first set of the next decadal consumer platforms. The big opportunity is pretty much disrupting what has been the core known of how consumer platforms get built. If you think of any content platform, you have creators, you have active consumers, and you have passive consumers. And with every new democratization that we do around content creation, we keep shifting this further up. So maybe the first gen of content creation platforms would have maybe like 2-4% creators, hardly any active engagers, and mostly passive consumers. Then cut over to the era of ByteDance and TikTok and Reels. You have far more number of creators. You have far more number of active consumers who are engaging through DMs, who are engaging through comments, and you have passive consumers. With AI, you have two big things to play with. A, the creation itself. Can you push the boundary of these platforms and get to a point where 20%, 25% of the user base is actually a creator? B, can you actually change the dynamics of the active engagement? What was earlier restricted to being about commenting or an influencer having to engage one-on-one, which is humanly not possible if they want to do it with their entire follower base, can you change that? And when you change these dynamics, history has always told us, every time these shifts happen, we do see the emergence of new consumer platforms. I'm super excited about the convergence of all of this and looking forward to some of these next decadal platforms potentially emerging from India.
In financial services, the holy grail is the bank branch of one. I'm saying bank, but I mean all financial services. A world where every Indian gets the kind of personal attention that only a great neighborhood banker could offer, but at national scale, what makes this potentially possible is AI. I was speaking to a seasoned, experienced banker. He gave me this lovely description of the bank of the 80s and 90s. He said it wasn't just a bank branch, it was a community center. Customers walked in, staff actually knew who they were, their job, their family, their habits. The front office person might not know the answer to the query immediately, but they knew exactly who to walk up to in the back of the branch and who to ask and come back with a solution. That's the essence of what we've lost. Ironically, AI might be what brings that neighborhood community feel back. It gives every Indian the equivalent of a personal banker, listens, understands, instantly routes the problem to the right person with the right expertise. That's the bank branch of one. In addition to this overall personal bank branch, there are two threads that we would like to pull at and invest behind. The first is that AI might make financial services not just faster and personalized, but fairer. What do I mean by that? Today, millions of Indians, especially those with lower income or small town customers, get a one-size-fits-all approach. They get bucketed as high risk, high cost, and therefore high interest, simply because old underwriting models can't see their daily financial rhythm. But many of them have incredibly stable incomes, stable lives, and consistent repayment behavior. With the bank branch of one, we can finally underwrite a person based on who they are, and therefore each Indian gets the right products at the price that they deserve, and not just what their neighbor is getting. So financial services becomes not just fast but fair. The other thread came from a conversation with Abhishek Singh, who leads India's AI mission. He said, DPI to the power of AI. And that's true. No country has the structural advantage that India has today. A complete data stack built on the digital public infrastructure for every Indian citizen, and a consent layer that lets me as a user control and share that data with whoever I want to and stop sharing with someone that I don't. Most countries are still arguing over this kind of framework, whereas in India, we've already built the plumbing. So the stack is tailor-made for personal AI assistants in finance. It's not just like a digital relationship manager, but a guide, a mentor, a negotiator on your behalf, all of those rolled into one. For the first time, that power of data, which India Stack's architects likely envisioned years ago, might finally reach every Indian. And 2026 might be the year that some of it clicks into place. If 2025 was the year that Indian finance experimented with AI, 2026 might be the year we finally see all of the promise coming into reality. With a bank branch of one, personalized, fair, and built on infrastructure the rest of the world simply doesn't have.
2025 has proven that Bharat is no longer just a DAO Mao farm. Microtransactions and subscriptions have unlocked monetization that was hard to imagine even 18 months ago. 2026 will be the year when AI enables true ground-up innovation, Bharat backwards. The late 2020s will be the age of AI-native apps. A customer in Madurai has very different preferences from someone in Udaipur. Our technology so far was limited in its ability to serve India's true and diverse needs. Our founders will solve specificity and relevance for 1 billion consumers who are forced into a global West-inspired UI UX. What is a text window for ChatGPT will be split out into a variety of use cases for Bharat, and not all in the same app. Companies like Dashreels are defining how AI can disrupt entertainment, enabling content creation at scale and diversity. AI in education will be in a language that is familiar and a format that is intuitive and personalized. Supernova and SpeakX are already building this for language learning. I urge you to check that out. Indian use cases for AI companions will evolve and look very different from the West. It will fill the gap created by disruptions to our joint family support structure. Last but not the least, Bharat is underserved in core services like primary healthcare, legal assistance, and financial literacy. AI enables solving for these at a massive scale and in native Indian languages. These are massive opportunities for our founders to create deep profit pools that could never have been unlocked before, and I'm super excited.
I talk to any CIO today and you'll hear a version of the same dream. I want an agentic framework, agents talking to each other, talking to my systems, and quietly getting work done automatically. The reality is far from that promise. To make that real, you need two things. The first is deep vertical expertise, someone who understands your world in painful detail, whether it's collections for financial services or business intelligence for manufacturing or procurement in healthcare. Second, you need rock solid plumbing and orchestration. Data pipelines that work, security compliance and governance, and finally, an agent orchestration across dozens of tools and APIs and models which are timely and cost efficient. That's exactly the kind of unglamorous, messy problem where Indian talent pools are extremely strong. You have vertical specialists who have spent decades solving these problems, who live and breathe security reviews, governance checklists, and integrations. Put them together, and you get the scaffolding that makes AI usable in the enterprise. And we're looking at investing in many such deep vertical AI companies. Putting all of it together, what kind of founders and companies are we excited about? The first is founders who are deep in their domain and are backing themselves, whether it's healthcare, whether it's financial services, and so on, and they go very deep. Second, they're excited about solving the problems end to end and owning the outcome, not just shipping a feature. Third, they're okay embracing AI and services early. They use agents and humans together to deliver the near 100%. They don't fear services revenue. They productize what repeats, turn scaffolding into tools and platforms. That's how IP compounds. That's how durable companies get built. This is potentially how you build AI companies out of India by compounding the India edge. The next global edge for India will be in making AI usable at scale inside the world's largest enterprises, solving all the boring, messy workflow that actually runs through India for the last 25 years. And if history is any guide, that's exactly where the real value will be created, and we are excited about investing behind this.
Indian founders have always been world class, but until now, most of their value stayed inside India. 2026 is the year that changes, I think. Indian SaaS founders showed the way. First, it was companies like Zoho, then Freshworks, Postman, and even MoEngage that basically built products that scaled globally. And now, younger ones like SuperOps and Rocket Lane are doing the same, all proving that India can build for the world. But consumer and B2B lagged behind because the ecosystem just wasn't ready. I think now it is. What's different now is this: India has become the world's harshest proving ground. If you can win in India, you're built for the world. Let's unpack that a little bit. India 1 behaves like the US: English proficiency, impeccable UI UX taste, and high product expectations. So if you can delight India 1, there is a good chance that you can win in the US. That is why multiple D2C brands like Mukobara, Minimalist, and many others are starting to chart global plans. At the same time, talent has hit critical mass, whether it's engineering, design, product, brand building, and the confidence to go global is finally here. And the ease of going global has changed. Companies like Shein and Temu have shown that you can enter the US and actually dominate if you do a good job at it. We've seen companies such as Skillmatics that have scaled across the US, building learning products in India for global households. Urban Company has done really well in the Middle East and UAE. Closer home, we have companies like Mosaic Wellness and You, which are D2C brands again that are finding great resonance from US customers. Urban Company, as we know, has done a great job in the Middle East and is finding resonance abroad. So that leaves us with B2B and B2B commerce startups. I don't think they are far behind either. There's a strong semiconductor and electronic space. There's better tooling and a sharper quality system. They have pushed Indian factories closer to global benchmarks. If you add new financing rails, supply chain financing, working capital access, and SMEs can now upgrade at speed. Captain Fresh, one of our portfolio companies, which is a leading seafood player, now gets most of its revenue from the US and Europe. Vigro, which is a company in the fruits B2B supply chain, they are expanding across Saudi and Middle East and are growing very rapidly. Trampoline, another startup in our portfolio, while it's younger, they are plugging into the Indian home decor factories into the global demand pools, which were once dominated by China. So overall, multiple examples across both consumer and B2B. Two forces make this a 2026 story in my mind. One, AI has flattened the tech playing field. Indian founders have identical access to the best models, plus India has a massive data advantage. And second, exports and the China plus one tailwind are creating default global style businesses. These, combined with strong recent IPOs and rising ambition from our Indian founders to scale globally, I think we're looking at a whole new mindset. Global isn't a milestone anymore, it's the starting line. 2026 will be the year where Indian founders stop asking, can we go global? And start asking, which market do we win first?
2025 was a very interesting year for global trade. A part of that was obviously fueled by uncertainty on tariffs, add global geopolitical tensions, and there was a very interesting challenge that people all over the world faced in terms of procurement. As we head into 2026, I think one of the big trend lines would be Indian manufacturing going global. And the triggers for that are A, as tariff becomes more certain, there's a strong belief that India will get into significantly more favorable terms compared to where it is today. Second, overall China plus one. And if there's one thing that is clear today, is that you need to diversify your supply chain and have manufacturing bases across the world. And third, most interestingly, is the rise of the Indian MSME. I think the capabilities that we have built in the last few years in manufacturing, from CNC machining to precision manufacturing to fabrication to foundry, I think lays the cornerstone for Indian manufacturing and Indian products to go global. Add to that our capability to design and to build to spec, we are no longer a build to print back office in manufacturing. All of this combined makes me super excited for manufacturing in 2026. We have seen companies like Captain Fresh and Zetwork already deliver $1 billion plus GMV in exports. And we are seeing a lot of interesting new companies like Circla, Woot, Seven Loop, J Aerospace, Air Energy, which are doing fantastic work in taking Indian engineering and manufacturing global. So that's something that I'm super excited for 2026.
AI security used to be about model safety. Now it's about org visibility and auditability. In 2023 to 2025, the first wave of AI security startups focused entirely on protecting these models and the data pipeline. Building guardrails, detecting prompt injections, and runtime protection were all some of the key capabilities that these tools had. Every large player, from Palo to CrowdStrike, have also made their acquisitions of early stage companies on this trend line. This wave was still manageable. There were a few models, a few chat interfaces, and a handful of monitored endpoints. In 2026, almost every product team is going to be spinning out AI features, business units are going to be deploying their own co-pilots, and agentic workflows are going to be everywhere. We already see folks connecting agents to their CRMs, to their emails, and that's a lot of sensitive data. The result, there's going to be this sprawling network of AI workloads, many of which will go untracked, unaudited, and often ungoverned. The CISO anxiety is real. I don't know how many AI agents I have, where they're running, where they're deployed, and what they're accessing. Most of our conversations with security leaders, often less than 1 in 5 report that they have some visibility into their AI estates. CISOs want tooling that can give them a view into what these agents are doing in their ecosystems, what types of data they're accessing, what are they doing with that data, and have some trail of that auditability. So this sets the stage for the next big tooling layer: visibility, governance, and control. Especially as AI penetrates the Fortune 2000s, a lot more demand for tooling in this space will pick up. Our view of this emerging stack includes 4 broad components. One is discovery and inventory of all AI workloads across the organization. 2, risk analysis, lineage mapping, and compliance-ready audit trails. 3, we'll see some policy enforcement baked into these tools. The emerging frameworks like the ISO 42001, the EU AI Act, and so on. Lastly, for control, you'll need to authenticate and authorize these non-human identities, give them just the right amount of access for just the right amount of time, and have an audit trail of everything they do. So at Z47, we've made some early investments across the stack. The first one is NASA. NASA has a full AI security stack baked into their cloud offering. This helps you monitor all your AI workloads, have that auditability and governance trail on top of it, also do runtime protection. The second company is ScaleKit. So ScaleKit is building that entire authentication and authorization stack for AI agents. We've also invested in Rakshan through DVC, which handles the discovery, risk, and governance stack for AI workloads. They also do have runtime capabilities. So the winners in this space will not just make AI a lot more powerful, but they'll also make it a lot more trustworthy for enterprises to adopt.
So if you've been following FinTech in 2025, you know the narrative has shifted. If 2025 was a year of rapid AI prototyping, 2026 seems to be officially the year of deployment. As investors in FinTech and financial services, we aren't just seeing chatbots anymore being deployed. We are seeing AI agents take over entire BFSI workflows, right from front office sales teams to middle office credit office and claims management, and right down to back office level compliance. The impact on P&L is direct, and for the first time we are seeing incumbents open to experimentation at a velocity we haven't seen in a decade. But with massive scale comes the need for strong guardrails. That is why we deeply appreciate RBI's recent announcement of the free AI framework. So if you were to think about it, these frameworks revolve around broadly 7 guiding principles for stakeholders. But the one that caught our eye at Z47 is innovation over restraint. The RBI is explicitly stating that they want to foster innovation and not operate it with fear. That is a massive green light for founders. Free AI has the potential to be India financial services DPI moment for artificial intelligence. Just as UPI democratized payments, free AI can establish population-level infrastructure that makes safe AI adoption accessible to everyone while continuing to foster innovation. Though considering the stakes at play here, we think that the industry should deal with it differently this time and also support RBI's vision. At Z47, we also made a detailed representation to RBI recently, channeling the voice of the ecosystem on how to turn these principles into a working reality. But as investors, you would believe that as it's natural that with every trend line, we're on the lookout to spot interesting opportunities, right? And the onset of free AI framework or regulations like DPDPA just further amplify the need for compliance tech solutions that ensure proper implementation by the stakeholders to actually achieve the spirit of these regulations. While these regulations are definitely in the right spirit, rising compliance demands and manual workflows are increasing the procedural burden on the financial services ecosystem. A typical regulated entity needs to track, interpret, and adhere to hundreds of circulars and maybe thousands of clauses. With AI, there's a clear opportunity to build solutions which make this way more efficient, driving not only productivity, but also ensuring sustainable growth with good governance.
If you like this episode of Zero to Infinity, there are so many more that you must check out. If you like Indian startup content, hearing about founder journeys, or knowing more about emerging sectors that we're investing in, Zero to Infinity is the channel that you need to subscribe to.